Disclaimer: this video is for educational purposes only and is not financial advice. Always do your own research before investing.
Hi guys, welcome back to my channel Dividend North. Today we will discuss about the MSTE versus BDAY and why I'm avoiding MSTE and watching BDAY performance so that I can start buying. Look, we all love massive yield. When you see a ticker like MSTE boasting a trailing yield of over 100%, your instinct is to hit that buy button. But today I'm giving you a massive warning. In the world of Bitcoin ETF, there is a very fine line between income and capital destruction. I've been digging into a new comparison report and the data is brutal. While some funds are essential handling your own money back while your portfolio evaporates, a new player BDAY just launched with a structure that might actually solve the capped upside problem that plagues this entire category. Today I'm explaining why I'm staying away from MSTE and positioning for BDAY in the coming days. Let's start with the elephant in the room, MSTE. It is leveraged covered call fund based on the MicroStrategy stock. Since MSTR is basically a Bitcoin proxy, MSTE is marketed as a high octane way to get Bitcoin linked performance. Now, if you look at the performance of this company, MSTE, and its sister ETF, MSTY, you can see in 1 year they have negative returns minus 81 and 89%. And if you look at 3 year return, and it's negative 82 and the 87% on both cases. Now, if you flip this into the total return, and you will see the total return in 3 years, since it's their lifetime, it is 68% for MSTY and MST 74%. Or 1 year, it is 71% and 81% for MSTE. So that tells you the story. With such a negative return, what is happening? Is it the yield trap? For a fund like MSTE to maintain that super high yield, it has to be generate equal return. When the underlying asset MicroStrategy is volatile or drops, the fund has to write aggressive options just to keep the lights on. This creates a total nightmare of capital erosion where you are generating paper income that you can never actually spend because your total account value is evaporating. One of the biggest lessons here is the high yield and positive total return are not the same thing. In fact, the data shows a pattern. The high yielding funds in the space like MSTE and its peer MSTY have delivered the worst outcome for investor. A huge chunk of the payout, almost 90%, is classified as a return of capital. This is a fancy way of saying that fund is just giving you your own money back. It's not new profit, it's your own principal sliced off and handed to you while the share price decay underneath. Now let's talk about the BDAY. A better mousetrap or better investment? If MST is the cautionary tale, why BDAY is different? Most Bitcoin income fund like BCC or HPEX write covered call directly on their Bitcoin. This is huge problem because it caps your upside. If Bitcoin moves, those funds miss the move because they sold the growth away for generating that yield. BDAY uses a much smarter decoupled strategy, uncapped Bitcoin. It holds a roughly 80% of spot Bitcoin, which is IBIT directly. Crucially, it does not write calls against that Bitcoin. You get 100% of the Bitcoin moonshot, the income engine. To get you that yield, it uses 25% leverage to hold a separate 20% technology slave, likely the NASDAQ. Zero DT strategy. It writes zero DTE, 0 days to expiration calls only on that tech sleeve only. This is brilliant. On paper, you are getting your Bitcoin growth from one bucket and your higher frequency income from a completely different bucket of tech stock. You aren't sacrificing your Bitcoin gain just to get the monthly check. Now, I have to be the voice of reason here. While BDAY's design is arguably the most thoughtfully engineered in the group, it is brand new. As of recording, BDAY has only been trading since June 2026. It hasn't even been finished its first full month or completed its first distribution. We have zero performance history for it. We also have to talk about the risk. BDAY still uses 25% leverage. Leverage is double edged sword. it boosts gain. But if Bitcoin enters a sustained downtrend, that leverage will amplify your losses just like it did for the other funds in the category. Also, zero DTE options program is very fast moving, actively traded strategy that hasn't been tested at this scale in a retail Bitcoin ETF before. So the bottom line, old way of doing Bitcoin income, writing calls on the Bitcoin itself or on the single stock like MSTR has proven to be a disaster for a long-term capital. BDAY is worth watching because it is the only one that lets you Bitcoin runs uncapped while you're using a separate tech engine for income. It is structural winner, but we still need to see it perform the way it perform in the real world. My advice would be to stay away from the yield traps like MSTE or MSTY, where the NAV is in the death spiral. If you are interested in BDAY, treat it as a thesis, keep your position size modest, and wait for at least 2 or 3 quarters of data before going all in. Let me know in the comments, are you chasing a high yield or are you waiting for a smarter structure like BDAY? Don't forget to like and subscribe for more deep dives into these complex ETFs. Also, one more thing at this point, if we go to this dividendhistory.org, you can see the BDAY is yielding around 18.84%, which is a pretty nice yield. And we already have received one, oh, actually, we are going to receive on the 22nd of July, the first payout, and the second is going to be on the 7th of August. Okay, so that's my quick summary of MST versus BDAY, guys. Thank you very much.